In fact, we have a market voice joining us now. Arvind Sanger, managing partner, Geosphere Capital, is with us. Arvind, very interesting times because, this is the last budget before the big election. So there will definitely be some populist measures that the government could look at. And then again, the global backdrop is not too bad as we head into the budget today. Your own expectations from a market standpoint, do you think the worst of the sell-off is now behind us?
Well, first of all, let's be clear. The sell-off was not caused by budget concerns. So budget, will be important, but there are other issues that, will drive the market in addition to the budget. But in terms of the budget itself, I think that the budget, my view on budgets is do no harm is the most important mantra for any budget, right? So if they can follow that mantra that they will not do any harm in terms of hurting investor sentiment or, you were talking about capital gains tax or anything else that would be negative. Obviously, the government has limited fiscal headway to hand out goodies in terms of things that might excite, the market in terms of, economic tax breaks or anything like that. But I'm hopeful that, the roadmap that the government has shown of fiscal responsibility continues. The question is, what kind of trajectory do they see towards their long-term, targets of fiscal deficit, and it'll be interesting to see how they get there. Because the reality is that so far, one of the disappointments over the years for Indian budgets has been almost always too optimistic on divestments and almost always not able to deliver on those numbers. So it'll be interesting to see the roadmap, and that'll be useful not just for the one-day rally or no rally, but for the coming days and weeks.
Okay, actually, they have somewhat got over this large divestment numbers. Last year itself, last budget was a bit modest. But Arvind, if we can zoom out of the budget itself, the Indian markets have clearly underperformed global markets, both Asian and US markets, in the month of January. How serious is the Adani episode from an FPI point of view? If the budget is good and the economy seems to be growing, as the economic survey is pointing out, will they just come back and bite?
I think so. I think at the end of the day, the growth is there. The economy is going to do fine, and investors will come back. I think the one thing that it does raise is, the credibility of Indian institutions. And I'm not talking about the Adani Group. They have their own ways to answer that. But Indian institutions have to be seen. Indian regulators have to be seen to dealing with this fairly for India to be treated as what it usually is, which is a high-class emerging markets where, people feel like corporate governance is given, fair hearing and fair assessment. And to the extent that that comes out of this whole episode, that'll help the market regain. Because remember, India was selling off before the Adani episode on a relative basis, China reopening, and I think we talked about this a few weeks ago. China reopening is the trade that is the most important trade. India has kind of, suffered this year what it benefited from last year of China's lockdown. So that's a bigger trade. But from the sideshow of the whole Adani episode, the important thing is, there are a lot of good Indian companies. There's good Indian growth. Just that the regulators and everybody else should be seen not to, be using a brush to brush this under the rug, but to just give a fair assessment of what is being asked of. But other than that, I think the Indian growth story and the Indian corporate quality is good enough that this episode will not interrupt. And I think the budget, as long as it again does no harm, should continue to help the market recover to to a more reasonable level. But India will, frankly, continue to underperform China. And the one risk for India, let me put the risk, and the one risk for the US and the one risk for the Fed is, I believe, China's rapid reopening is going to be inflationary, and people who dream otherwise are mistaken. Oil prices are going higher, commodity prices are going higher. That'll have some inflationary impact, and that is the one thing that could upset the apple cart for global markets.
The China stock index is up 57% from the October lows, and it's now trading at 18 times earnings, which is above its own historical average. So it's no longer 11, 12 times. So it's not like, at some point, that also will start to reverse, right? I mean, that market itself has done so much, maybe more to go, as Arvind said. Arvind, the US particularly, because that's the most important trendsetter economy-wise, market-wise, is that looking better? the price action is very encouraging. Equity indices, the dollar, what's happening to yields, your sense?
Well, look, bear market rallies always look good. I'm of the opinion that the bear market is not over.
Okay.
You always feel very good about bear market rallies. My view is that the Fed is not going to be able to deliver to the market, what it hopes in the medium term. Yes, it'll do 25 basis points almost certainly in this next decision. But beyond that, is it going to be able to ease off if inflation proves to be stubbornly high, above 3%, when the Fed target is 2.5%? That could mean a little more pain for the market. So I don't think that it's going to be as straightforward.
Okay, budget or no budget, right? I mean, this market has been under pressure for a while. Let's not fool ourselves. I mean, in the month of January alone, there's been, over 40,000 crores of selling from FIIs. Is there anything from a foreign investor standpoint that can change in this budget? I know a lot has been done off budget as well, whether you talk about, infrastructure development in sectors like defense, renewable energy, power, etc. So a lot of the good work has already been done. But from a foreign investor standpoint, in this budget, anything that you're looking forward to?
Well, I think we're looking for signs that the Indian government is going to continue to invest, in things that can help improve the infrastructure. So capex is important. I don't want to see deficit reduction on the back of capex cuts. So Indian government continuing to do infrastructure spending is important. But Indian government announcing something bold, like, they've been talking about Concord, maybe they're throwing Hindustan Zinc, some specific plans for more aggressive, getting out of the economic parts of the economy that the government doesn't need to be in. More signs of that. Anything more on the infrastructure front, anything interesting on that front would be important. But I think other than that, the most important thing is to have a credible fiscal path towards the government not crowding out private sector and providing the support for private sector to feel confident about raising capex, and interest rates going to be not crowded out again by government borrowing. So I think those are the most important things. I'm not looking for whether it's PLI stream or anything else, any big bang announcements. Maybe I'm missing it, but I'm not looking for anything that's going to dramatically change the equation.
Okay. Do no harm, as you said, right? As they say, no news is good news. All right, Arvind, thanks a lot for stopping by and giving us a quick primer on what to expect from Budget Day. Let's take